What's up, my people? Welcome back to Forex technical analysis for swing trading. Today is Tuesday and let's dive in. So, as we know, we always start with the USD index chart. So, here we have the original uptrend, up leg, retracement, up leg. Market currently is doing the retracement and soon it is expected to return into original uptrend. So note that although we have the lot of candles below the yellow moving average line, it is not price wise, it's not enough for the trend reversal. So it is still considered the fake out, and we have the up leg retracement. Market could retrace a little bit more, but sooner or later it should return into original trend up. So in other words, in the USD index chart, we have uptrend in USD index chart, which means we're going to look for opportunities to buy USD. So let's write it down. So we have, today is Tuesday, USD index. USD index chart, trend is up. We're gonna look for opportunities to buy USD. Okay, now let's analyze each forex pair individually. So first we have the USD Japan yen. So we have nice up leg, then market is retracing, lot of candles hanging out near the yellow moving average line, right? So it signifies that trend, although trend is up, the market is demonstrating the really weak uptrend. So I would recommend waiting on USD Japan yen. So if it returns into original trend, soon market should explode like this, then retrace, then continue to go up. Until that, it's better to wait on USD Japan yen because the trend is weak. Okay, let's write it down. USD Japan yen, trend is up, leg size is okay. Currently market is retraced about 50%, but I wouldn't recommend buying USD Japan yen. Although market is in a good zone, I wouldn't recommend it because trend is weak, because it's just market is hanging out really close to original yellow moving average line. That's not the best behavior. Okay, let's continue. USD Canada dollar. So we have up leg, really nice sided leg, retracement, then another up leg. The size of this leg is okay, not the best, but okay. But now the market is retraced a lot with a lot of fake out. Then market seems to be returning into original trend. So all market is, just to keep in mind that although market is in a really nice retracement zone around the 60%, it's the size of this leg is okay, not too big, not too small, but although it's not nice, not optimal, but it is okay level. So let's write it down. And by the way, I will still recommend waiting on the USD Canada dollar because we have much better pair offering a good opportunity. So wait like 2 minutes, we will get there. So let's write it down. USD Canada dollar, trend is up with the fake up, leg size is okay, market is retraced about 60% zone. I would not best. On the note part, I would say not best. So USD Schweizer franc. So here, market is consistently behaving above the yellow moving average line, right? So trend is considered up. Market is retracing currently, but notice that market is hanging out really closely to yellow moving average line. That's something we don't like because it signifies the trend is weak. So sooner or later, I would expect the market to return into original trend like this. Then once market starts retracing, we will start buying. So until that, we're gonna wait. So let's write it down. USD shifter franc, trend is up with the fake out, leg size is nice. Market is currently at the 50% retracement, but we're not gonna buy anything because the trend is weak. Okay, pound USD. So here we have downtrend, retracement, downtrend, retracement, and the one thing that was unexpected was that if the original uptrend was still holding, this resistance level is a really strong resistance level, but this resistance level is touched upward, so that is something unexpected, and at this point I wouldn't recommend trading pound USD. Most likely trend is still down because we don't see enough breakthrough on the up candles here, right? So if the trend is still down, market should continue to go down like this, demonstrate a nice leg, then once more when it retraces into good zone, we will start selling pound USD. Until that, I would recommend wait. Okay, so let's write it down. Pound USD, trend is down. I would say leg size is small, that's why we're gonna wait. So when I say small, like a current down leg is this, down leg, nice size, retracement, down leg, retracement, and the current down leg is this. It's a very small compared to other directional legs. So I would expect the market to go down a little bit, demonstrate nice leg, then let it retrace and trade. Okay, next pair, Euro USD. So as you guys know, I have all of my available positions on Euro USD, selling it, so that's why I'm not able to trade additional positions. So we have down leg, retracement, down leg. So when the market retraced about the 50% zone here, I sold Euro USD, right? But since then, market keeps retracing near the yellow moving average line, which signifies the weak trend, but sooner or later, market should return into original trend and hit some Fibonacci extension down here. But currently, right now, trend is down, but the market is demonstrating the weak trend. So I wouldn't recommend trading Euro USD right now. So let's write it down. Euro USD trend is down. I have all of my existing positions on Euro USD, but market is demonstrating the weak trend. Okay. Next, Aussie. So here we have the classic example of sideways action. So market is up, down, up, down, up. Lot of candles here, lot of candles here, lot of candles also down, lot of candles also down, lot of candles also up. So market is classically oscillating up and down the yellow moving average line. That's a sideways action. There is no trend. When there is no trend, there will be no trade. So let's write it down. So Aussie market is doing the sideways action. That's why we're not gonna trade Aussie. So okay. Now the New Zealand dollar USD. So here New Zealand dollar USD looks best to trade. So because we have market has been consistently behaving below the yellow moving average line. Market is retracing with the fake out here and there, which is totally expected. So down leg, retracement with the fake out, down leg, retracement, down leg. Market is faking out currently and seems to be returning into original trend. So right now, New Zealand dollar USD looks best in terms of the price action. So we have nice down leg here, retracement. If the market retraces at least the 50 to 60% zone here, then I would recommend selling New Zealand dollar USD. New Zealand dollar USD has a really healthy downtrend, and it's in terms of the price action, it looks best. So let's write it down. New Zealand dollar USD down, nice. Market is currently about 40% retracement. Wait until the 50% retracement, then start selling New Zealand dollar USD. So in terms of the price action, the Canada dollar has also a clear trend, but we have a lot of fake up candles like this, and also the size of this last direction leg is just not the best. So that's why let's be cautious. Let's not touch loonie. So instead of that, focus on the New Zealand dollar USD and just wait a little bit until market retrace about the 50% zone here, then start selling New Zealand dollar USD. Alright guys, thank you for watching and see you on next videos.